Lemaire opposes Couche-Tard's bid for supermarket chain Carrefour, casting doubt on the $20 billion deal. Now, we do have futures that are pointing slightly higher here this morning, a little bit more of a mixed picture in the U.S., and frankly, FTSE futures aren't that far off the ground right now. You can see up only 0.06 of 1%. DAX futures are gaining about 0.25%. So what we do expect to see gains, but maybe not much size on this Thursday. Let's go ahead and take a look at the global macro movers screen. The far left-hand column here is your equity indexes. And again, I've got to talk to programmers. I'm going to ask Hillary to talk to programmers again. Indexes is Bloomberg style. Indices is not. And I don't know how you can work at this company without knowing that. Indexes, it should say. In any case, it will populate there as they open up live. The FTSE 100 gaining 0.1%, only a little bit less. The DAX up 0.25% out of the gates early. The IBEX, the FTSE, and the CAC right now all really little changed, but to the downside, falling a little, seeing markets slip slightly at the open with the exception of the German benchmark. U.S. stock futures are also a little bit mixed this morning, but Treasury yields are advancing, and I think that's the key market story to focus in on today. This after reports that Joe Biden is planning to present a COVID relief package of around $2 trillion, and there's more talk of Fed tapering. Joining us now is Freddie Late, Latitude Investment founder and CIO. Freddie, what do you think about the idea that U.S. stimulus really drives risk appetite around the world?
I think it's probably about right at the moment, only for the shortish term, but I think it is right. And I think the effect that it has on 10-year yields is probably the most determining of all of it. You know, if we do get a larger fiscal package from Biden, which is expected, and more rhetoric around spending more in the future too, I do anticipate a further rise up in yields. And that will cause, you know, the continuing shift within the market that we've seen, and potentially at a slightly higher level, a potential derating of the market as well, to watch out for. So I think it's sort of funny because more stimulus seems to be risk positive, but actually the effect quite quickly on the 10-year yield could cause an issue around valuations in the market, even though it supports underlying earnings.
Yeah, it's interesting also that it comes at the same time as the Fed is seemingly having a discussion about tapering. Okay, we had Brainerd and Clarida push back on that yesterday, and I guess, do you expect to hear Powell push back a little bit on that today as well?
I would expect so. I think it probably suits him to have other members of the Fed saying slightly different things and to cloud the message a little bit, because they've set out in the middle of the crisis that, you know, they're not going to start thinking about raising rates for a long time. You know, rates were pinned until the end of 2022 down at the bottom end. And I think it probably helps to start seeing a little bit of rhetoric about the fact that, you know, well, if there is a strong recovery and we do open up later this year, you know, we will be reactive to the data. But I think it's still probably on the, you know, the obligation on the chairman to maintain that longer term, lower for longer sort of mentality. So I think he will come out and smooth the market dovishly. But I think we should continue to expect more creeping rhetoric around potential rate rises, and you can see future rate expectations in the US are creeping up, which has been supporting the dollar a little recently. And I think there's going to be a lot of volatility around opinion about when the Fed will taper and start to raise rates.
What do you think about inflation? You hold a lot of U.S. stocks that touch the consumer. AutoZone, Unilever's not a U.S. stock, but a lot of consumers buy their products there. You've got Dollar Tree, you've got Advanced Auto, you've got Coca-Cola. I mean, just going through a few here, BP, you know, if you look at the stripped down number, these are things that could move if you see inflation, right?
Yeah, so obviously, as we're aware, you know, for the last sort of 5 or 10 years, really, we've seen a huge amount of asset price inflation. So we've seen inflation, just not through the CPI measures that we've seen in the past. And any investors have really benefited from that. The next leg could see more of that, and I think it probably will. But also, we will see a creeping move through CPI. You've seen a lot of, you know, prices paid indices rising, commodity prices rising, certain shortages in the global trading markets. And I think that will lead to slightly higher inflation. I'm not yet calling for sort of meaningfully higher inflation in the short term, but it's certainly a risk, and it's probably the greatest risk we face. So from a portfolio perspective, it's something we're very conscious of, making sure we have some stocks in there that will benefit particularly well if inflation returns, and also ensuring that those consumer names that we own and any other business, frankly, has sufficient pricing power and market position to see itself through any periods of inflation if they do come. So it's not about taking a big call that it will come. It's about saying it really could, and it could have a meaningful impact on markets and certain subsectors, avoiding those and trying to make sure that you're positioned in a way that you can continue to perform for your clients if inflation returns. And I think the names you just listed are a good subset of the way we're thinking about it.
I missed out on Diageo and Heineken. Hopefully we don't see any inflation in those important staples. Let me ask you about your preferred assets to hold, Freddie, in case we do see inflation. And I know that you're not forecasting, no one's forecasting really runaway inflation, but is gold still the best hedge against that? Or do you think that equities are a good hedge against inflation, even at these valuations?
Yeah, it's a very good question. And I'm firmly of the view that actually just equities, and particularly those that are slightly more cyclical or less expensive, so the more value end of things in particular, compared to the growth and the sort of tech stocks in a way, those are one of the most attractive assets you can own for the ensuing cycle that will have the threat of inflation hanging over it all the way through. Gold is a reasonably good hedge as well. Well, it's a reasonably good investment, I should say, because what we've noticed this year actually is that the reason gold's going up principally is lower rates, lower real yields, and due to the massive money printing in America in particular, but across the developed and emerging worlds. And so I think gold probably has a decent position in a portfolio just from an upside perspective. However, it's been moving very much in line with equity markets because both have been trading on this concept of sort of easier money, lower rates, driving valuations higher. And so I don't believe at the moment gold acts as a good portfolio hedge, even if it may make reasonable returns for investors. So we actually don't own it because our process is all around trying to diversify that equity risk with those non-equities. But I do still think it could be a good investment.
All right. Yeah, we do see there's a lower third on you right now showing gold at 1842. It really hasn't moved much, especially when you look at it, you know, compared to digital gold, the gains there have been much stronger. Freddie Late, Latitude Investment founder and CIO, stays with us. We're going to talk more about some of those names that I mentioned with him in a moment. Right now, I want to get to the impeachment story. President Trump has been impeached again on a single charge of incitement of insurrection. That makes him the only president ever to have been impeached twice. Of course, there have only been 4 impeachments now in U.S. history. Trump faces a trial in the Senate over his role now in causing or helping to push the Capitol riots forward. Joining us now is our reporter, Bruce Einhorn. So, Bruce, it does seem like, you know, just looking at the numbers, not knowing the history, you think, wow, only 10 Republicans also voted to impeach. But it's actually the most bipartisan impeachment vote we've ever seen.
Indeed it is. And actually, it's the first bipartisan impeachment vote we've seen. This is the first time any members from the president's own party have voted for impeachment. So as you pointed out, there were 10 Republicans who voted with the Democrats. There were also 4 other Republicans who just didn't vote.
So that's interesting, and I wonder what it can tell us about what happens in the Senate. You know, reportedly, Mitch McConnell has said he hasn't made up his mind, which is probably good, you know, because he hasn't even, I guess, seen the trial and the evidence yet, although he experienced some of the evidence firsthand. What should we expect? What's the possibility of a conviction?
Well, it's interesting that you mentioned the word trial, right? Because we didn't really have much of a trial last year during the first impeachment. Mitch McConnell and the Republicans didn't allow any evidence to be called. And the rules will most likely be very different this time, if and when we get to a trial, because Chuck Schumer will be running the Senate probably by this time next week. The two senators from Georgia will get seated, and Kamala Harris will be breaking the 50-50 tie. So between now and then, Mitch McConnell still runs the Senate, and Mitch McConnell has said that they won't be bringing up, the Senate won't be even returning to take up any business until the 19th. So it's highly unlikely there's going to be any action on the impeachment front on the Senate side before Joe Biden becomes president. It's quite possible that it will happen afterwards, and then it remains to be seen when Nancy Pelosi will decide to hand this over to the Senate, and then when the Senate would pick it up.
All right, Bruce, interesting stuff. We'll continue to follow along, obviously, with this story. Bruce Einhorn reporting on the only U.S. president to be impeached twice. And as far as I can see, he's the only U.S. president ever to be accused of inciting an insurrection against his own country. Coming up, UK supermarket Tesco sees Christmas sales boosted by an online surge. Latitude's Freddie Late tells us why the stock is undervalued next. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are are 13 minutes into the session, looking at kind of a mixed picture here with the DAX gaining about 0.25%, the CAC actually in negative territory. Let's get the Bloomberg Business Flash. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Couche-Tard's $20 billion bid for Carrefour has hit a snag. The French government is opposing the deal, with Finance Minister Bruno Le Maire saying the pandemic highlights the importance of a country controlling its food supply. He says a rule on the screening of foreign investments could allow the government to block the deal. Standard Chartered is positioning a Singapore-based executive as its top internal candidate to replace CEO Bill Winters. Sources tell Bloomberg that Simon Cooper, who runs the lender's investment bank and commercial operations, has been taking development and leadership courses to prepare him for the top job. No comment from Stan Chart. Could space be the next big opportunity for investors? Kathy Wood, the head of ARK Investment, is launching a space ETF. The actively managed fund will track companies engaged in exploration and innovation. After massive inflows this past year, her once niche firm now oversees over $41 billion in ETF products. That's your Bloomberg Business Flash. Matt.
Laura, thanks very much. Laura right there in London with your Business Flash. Now, Tesco has posted strong Christmas sales, helped by a surge in online ordering. Freddie Late, Latitude Investment founder and CIO, is still with us. He holds Tesco as a defensive play, and he says it's undervalued by the market. Freddie, why?
I think it's been undervalued partly because of Brexit risks in the short term, and also because over the last 5 years, it's really been going through a very heavy restructuring. And I think people have sort of stopped paying attention to it. It's not got the level of underlying revenue growth that certain other businesses and sectors in the market, which have been more interesting for the last 5 years, have got. But it does have a very, very good story. It's got very defensive revenue growth. It's got cost-cutting opportunities, and it's got a huge amount of individual self-help actions, which have been played out over the last 3 to 5 years, which are really now starting to come through in online market share growth, actual physical store market share growth, integration of Booker. It's obviously been distracted by the crisis, but they've done well through the crisis. Obviously, a lot of people have moved to them. They've nearly doubled their online shopping, for example. And I think they're going to come out of this a huge amount stronger. And it's really about the free cash flow that a business like this can generate. So they've taken the hard decisions to sell off some of their non-core assets. Their Thai sale went through for $5 billion just the other day, and there'll be a big special dividend coming on that next month. The underlying free cash flow in the business is going very well, and we think it'll be on a 7 to 8% free cash flow yield. And alongside the dividend, if and when they start doing buybacks, now that the pension is nearly fully funded and the balance sheet's in much better shape, we believe you can look towards a sort of high single digit, maybe even 10% compound value creation per year from a highly defensive business, with a lot of optionality around what they could do with the bank as that recovers, what they could do with Clubcard and online and digital. And we just think there's a lot of opportunity for them. They still haven't integrated Booker fully. Booker's obviously had a more difficult time because it plays into the catering sector. But I think as the dust settles next year, through Brexit, we realized that Brexit was a reasonably sort of millennium bug of an issue to do with imports and exports, which was the concern for Tesco. And then we move out and we start looking at that clean free cash flow that's coming through, and the fact that it's probably trading on 12, 13 times earnings for a very defensive growth business, I think will be highly attractive to people again. It's certainly highly attractive to us.
Is there any more M&A to be done in the highly competitive UK grocery market? I mean, you've got Tesco, Sainsbury's, Waitrose, I guess M&S. I mean, there are a lot of big names in just a country with 60 million people.
Yeah, so it is a competitive industry, and I think M&A is probably unlikely to be the way that you ease the competitive pressure and the pricing pressure. There's two ways that I'd see it happening more likely. One is Ocado have always been growing market share at a sort of zero profit margin broadly in their UK business, a standard network effect sort of business model. But I think if they start charging for that and start saying, actually, our new business model of building out CFCs for Kroger and international partners is more relevant than the building out the sort of market share in the UK, you could see a more realistic pricing for online, which would drive those online margins far higher and back above group level. So I think that's one of the key changes that could happen. And the second one is Aldi and Lidl. They really grew massively in the recession of 2009-10 into the hearts and minds of the sort of UK consumer, and have done an incredibly good job with their offering. But I think over the last couple of years, Tesco's come out and really aggressively price matched them on the sort of 2,000 to 3,000 SKUs that they sell similar to Aldi and Lidl. They've reinvigorated their own brands business to look much more similar. And I think you've seen the operating margins and the store growth at those two businesses shrink dramatically. Again, those two businesses are now driving for a big American push, a US push, which is a far larger market and a far bigger prize for them. And it would make sense to me to see them take the foot off the gas, allow a little bit of price increase, allow a bit of profit growth and free cash flow growth to generate in the UK market with which to fund international expansion. So to me, the two greatest aggressors in the market have very good reason to allow a little bit of price creep, or at least to stop the endless price wars that we've seen over the last 5 to 10 years. So even without consolidation, the point is I think the competitive environment is improving.
All right, Freddie, thanks very much for joining us. Freddie Late there, Latitude Investment founder and CIO. Freddie is going to be continuing the conversation with us on Bloomberg Radio at 9 a.m. UK time. So if you're in London, tune in on DAB Digital Radio for that. If you're elsewhere, just Google Bloomberg Radio and click on Listen Live. Coming up, Bruno Le Maire throws, speaking of supermarkets, Couche-Tard's bid for taking over Carrefour into doubt. The French finance minister says food security is a priority. We'll discuss next. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open right now, 22 minutes into the session. Let's take a look at some of the stocks that are on the move this morning, as we have, for the most part, green arrows across European equity indexes. ASMI is gaining after TSMC boosted capital spending amid surging demand. Renault targeting 3% group operating margin by 2023 and 5% 2 years later seems to have disappointed markets slightly, or maybe it was kind of buy the rumor, sell the fact. I'll talk to Clotilde Delbo a little bit later today, and we'll bring you that interview. And then Carrefour, the French government has come out against the proposed takeover of Carrefour by Canadian convenience store group Couche-Tard, the company that owns Circle K, that casts doubt on the future of what would be a $20 billion deal. And joining us to speak about this is our European retail reporter, Angelina Rasquet. Angelina, why is Le Maire opposed to this? Surely you can trust the Canadians to continue selling you food, right?
Yeah, well, it kind of came as a surprise, his statement last night. He said the COVID crisis showed the importance of domestic control over the food supply. Carrefour and other grocers faced surges in demand during the lockdowns, especially in March-April lockdown, with consumers really clearing shelves of some items. So France already had legal tools to screen potential foreign buyers of French companies. These tools were boosted during the pandemic to prevent predators from buying vulnerable companies. And these tools actually apply not only to the production of food, but also to the distribution of food, Bruno Le Maire said yesterday. So for him, food security and food independence is crucial. It's actually a priority.
And then I'm guessing the unions would also scrutinize this deal and the government even further.
Yeah, it's entirely possible. I mean, we can expect that guarantees would come when it comes to preserving jobs, and these would be a prerequisite for any Couche-Tard Carrefour deal to go through. Remember that Carrefour is the first private employer in France. It has a workforce of around 100,000 employees. But analysts do say that since there's no geographical overlap in France between Carrefour and Couche-Tard's operations, it's unlikely we'll see job cuts anyway. So that should provide some relief for the government.
What is the actual rationale of this deal?
Well, analysts are skeptical. They see little operations and geographical overlap. So there's little room for synergies. Couche-Tard in North America operates mostly in North America with convenience stores called dépanneurs and fuel stations. Carrefour is a food grocer. Half of its revenue comes from France, but it also has a lot of operations in Latin America. And Carrefour in recent years found big success with what are called hypermarkets, but that's being challenged right now with the push for online and also tinier supermarket formats in urban centers.
All right, our European luxury and retail reporter Angelina Rasquet there talking to us about the potential $20 billion deal and the potential for it to get shot down as well. Thanks very much for joining us. Up next, we'll talk about saving the city. I'm talking about London. The UK and EU start financial services talks this week. Can London hold on to its dominance as a center, as really the capital of global finance? Let's just go ahead and admit it. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open, 30 minutes into the trading day right now, and we do see some pretty decent green arrows on the screen. Let's take a look at the story so far. With the Stock 600, this is the broader European benchmark index. You can see that we have risen pretty well and haven't come all that far down. Actually, if this were a longer-term chart of Bitcoin, I would say we've come crashing down, and it's definitely the end. But it's just the Stock 600 for the day, so we'll say it's a pretty decent rise, about 1/3 to 410. And if you take a look at the industry groups on the Stock 600 that are doing well today with the GRR function, as we tend to do, you'll see that tech is leading the way with automakers and auto parts, basic resources, and travel and leisure not far behind. You can look at the GRR if you want at home. I guess we're not going to here on TV. Let's get the Bloomberg First Word News. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. President Donald Trump has been impeached by the U.S. House of Representatives for a historic second time. Democrats and 10 Republicans voted to charge him with incitement of insurrection for the role he played in his supporters' attack on the Capitol. The charges next go to the Senate for trial, but a conviction is all but impossible before Joe Biden becomes president. Italy's government is on the verge of collapse. A junior coalition partner has pulled out, meaning Premier Giuseppe Conte no longer has a majority in parliament. There's no clear end in sight to the political crisis in Rome. Conte may step down, leading to a new round of coalition talks or a new prime minister. The US is said to be dropping its plan to ban investments in Alibaba and Tencent. A source tells Bloomberg the Treasury Department blocked the move, removing the uncertainty hanging over Asia's two biggest companies. Officials also debated blocking search engine Baidu, but also dropped that plan. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt.
Laura, thanks very much for that, Laura, right there with your news. Now, the UK and the EU are starting talks this week on how regulators will cooperate over financial services. The two sides have agreed to reach a memorandum of understanding by March, but we know how that works. And will the final agreement preserve the City of London's dominance as the global financial capital? Joining us now is Barney Reynolds, Shearman & Sterling's global head of the Financial Services Industry Group. He's been a legal advisor to MPs on Brexit issues related to financial services. But Barney, it didn't look like the UK really worked to secure a deal for financial services. Certainly there isn't one. Why do you think that is? Why punt that such an important thing for the UK forward?
Well, there are some in the EU who want a shot at trying to pull financial services business into their member state through the use of EU law. It is very unusual, in fact, unprecedented, to get a financial services deal as part of a trade deal of the nature, in fact, I proposed in something called enhanced equivalence, which involves taking EU recognition rules for financial regulations abroad and tweaking them to make it work in a trade deal context. And so the EU didn't look as if it wished to do that. So we're in a position now where there's going to be a discussion on collaboration amongst regulators, which I'm very confident of, and unilateral declarations of equivalence with some framework around it instead.
So we've spoken to a couple of exchange CEOs who point to their EU share trading, which has gone completely to the continent. Of course, they were prepared for it. They opened offices over there, but they said, you know what, it's never coming back. Is that true for a lot of business that used to take place in the city, Barney?
I don't think so. I think the city's position as a global financial centre is not dependent on and hasn't arisen from the EU law framework. EU law has, since 1989, rolled out something called a passport, which has allowed UK businesses to deliver services to customers across the EU under a single rulebook. And there are some benefits to that. It really kicked in a proper way after 2007. So it's only quite a recent thing. The benefits are, in fact, to EU customers and businesses in getting the cheapest possible access to the global capital flows in London. Those benefits will be reduced to the extent that the EU doesn't make equivalence determinations, but that does not affect the global capital flows taking place here. All you're talking about is the cost to recipients of the EU and in particular businesses and consumers in getting their financial services products. And I think customers ultimately will vote with their fingers in this modern online world and get their services from the cheapest, most efficient and most competitive place, which is here.
What do you see in terms of executives or workers in the financial industry? I mean, why do they want to stay in London? And are you concerned that they'll start to prefer working in Paris, Dublin, Madrid, Frankfurt? Probably not Frankfurt, but the rest?
It's not really a question of being concerned. I just don't think it's going to happen for the vast majority, because people are here for a reason. It's not just the country, the city, and so on. They're here because financial services has natural agglomeration effects of benefits, interconnectivities between things, and people want to be where the action is, where the best people are. You see the same to some degree in the context of internet businesses. And I don't see that changing. And so the real question is how much of a sort of presence, which would be just the cost of EU customers and businesses, the EU law requires for its consumers. But there is a sort of override to that, which is the customers can come to the market as they have been doing for hundreds of years. And I think that will happen, particularly in this virtual world. And the way that happens is that either under EU law, they're allowed to reach out to the UK and get their services under purely UK law anyway, under a concept called reverse registration, or they can set up, if they're a business, a tiny little place of business here so that they get the service purely within the UK jurisdiction. So I think the UK really, the thing for the UK to... Yeah, sorry.
Well, no, I was just going to ask. So we're about to see these talks start. When do you expect London to get equivalence, and when do you think, how long do you think that's going to take?
Well, there's politics at play. I can't predict exactly how long it's going to take to play out. There are some in the EU who are not looking at the benefits of easy access to global capital flows for their citizens and businesses, and instead looking to see if they can control the financial market. Now, I don't think that's ultimately possible. And I think there will be a realization and a set of equivalence recognitions that will unfurl. But I can't predict exactly when. I think the main thing the UK now needs to do is be more of itself. The UK's legal and regulatory framework, I think, is the best in the world. And the common law system, which is the same as in the US, of course, it needs to be recaptured and revitalized, because the price tag for the passport that I mentioned was agreeing an EU rulebook on a civil law codified model. So there's been a whole blanket of rules created under the sort of continental codified model of lawmaking and regulation, which has actually dampened UK competitiveness. And I think the UK immediately needs to get back to its common law approach, where presumptively businesses are able to have far more commercial freedom and presumptively free, and then you focus on specific risks, which is actually a tried and tested and a better way of regulating. In fact, the 2007-8 crisis happened under the EU blanket. If you go back to 1929 crash, the UK wasn't as affected as elsewhere. In many ways, as a result of that, its regulatory framework is pretty rigorous and tried and tested.
All right, Barney, thanks very much for joining us today. Barney Reynolds there, Shearman and Sterling, Global Head of the Financial Services Industry Group, talking to us about the negotiations for the city. Up next, who won the U.S.-China trade war, with President Trump on his way out and Beijing reporting another record trade surplus. We'll look at how that happened. This is Bloomberg. Welcome back to the European Open. We are 43 minutes into the session and looking at gains on the DAX of 0.75%. The FTSE is up a little bit more than a third. Let's get the Bloomberg Business Flash. For that, we go back to London and Laura Wright. Laura?
Thanks, Matt. Twitter is standing by its decision to ban President Trump. CEO Jack Dorsey says it was the right decision in the name of public safety, but he sees the move as a failure to promote healthy conversation on the platform. Meanwhile, Airbnb is cancelling reservations in the Washington area next week, a move designed to minimize any violence at President-elect Joe Biden's inauguration. A trading app is warning it may have to restrict Bitcoin purchases this weekend. Retail platform eToro is fielding so much demand it may have to put limits on buy orders for cryptocurrencies. Unlike stocks, cryptos trade 24 hours a day and volume often surges at weekends when retail investors have more free time to play the market. Renault is setting out goals for improving its profitability over several years and extending its cost-cutting. The car maker is targeting a more than 3% operating margin by 2023 and returns of at least 5% 2 years after that. It comes as Renault is battling declining car sales and the expensive shift to electric vehicles. Bloomberg speaks with Renault's deputy CEO later today. That's your Bloomberg Business Flash. Matt.
Laura, thanks very much. Laura right there in London with your flash. Now, China's export boom continued in December, pushing the country's trade surplus to another record high. 4 years after Donald Trump came into office and said this was the measure that should be used to judge who is winning or losing a trade war. Let's get over right now to Bloomberg's chief Asia correspondent, Enda Curran. And how is this possible? The president, came into office saying, we can't have this kind of trade deficit, China can't have this kind of trade surplus, and started to make moves to change that. It seems to have affected, in the end, very little.
Yeah, I mean, there are different variables, Matt, or different metrics of how you want to measure this, but the one that a lot of people point to is the trade surplus, and rather than shrinking that with the US, China has grown it over the last few years. And I suppose one of the big factors has been the pandemic. This was a trend even before the pandemic, but the pandemic supercharged it because there's been huge demand for healthcare equipment made in China, and then of course huge demand for the work from home technology that we all need made from China, so your laptops and everything else. And the US has been hoovering up those Chinese-made goods. So the net effect has been the surplus is widening, China's trade surplus with the US is widening. And then if you look at the other metrics, I mean, for example, there isn't any real sign of a widespread exodus of US companies or US investment necessarily fleeing China just yet. There's an argument that the tariffs, the $360 billion US worth of tariffs that were put on Chinese goods actually became something of a levy on US consumers. And of course, in terms of the reforms that China is making or that they have promised to do Washington, a lot of them have been on China's own terms and for China's own motivations. For example, IP reform is something that China has been wanted to do to drive innovation and competition in its own economy for a while now anyway. So they're pushing it through IP reform as much for itself as anyone else. So the roundabout view from economists on this is when you stack it all up, it's not clear that anybody necessarily wins a trade war, of course, but it's certainly not clear that that the outgoing US administration has won this one either.
Well, I'm just thinking about what President Trump himself has said. Trade wars are easy to win, he said, and the tariffs would not be a tax on U.S. consumers, but the Chinese would pay for them. He also managed to get the Chinese to promise to buy hundreds of billions of dollars of U.S. goods. How is that all working out?
Well, nowhere close to meeting that target into the end of last year, Matt. I mean, as you mentioned, hundreds of billions of dollars worth of commodities exports like agricultural produce such as soybeans, some energy products as well. Nowhere close to it. And I don't think anybody thinks it's realistic that it will be met at this time either. One thing to note, though, is that we are on the cusp of a new administration in the US, and, you know, for all the criticism of this trade agreement, few expect incoming President-elect President Biden to roll back any of these measures, be it the tariffs, be it technology controls, or be it the sanctions, or anything else that has been placed on China's economy and on Chinese officials. So the thinking for a lot of people watching this is, regardless of your view of the trade war, these metrics are going to remain in place. These levies will remain in place for some time. It will take a lot to see it rolled back. And if anything, even if the tone coming out of the new administration is different, President Biden is expected to be as hawkish on China as any other. So none of these developments on the US-China trade story over the last few years are going to go back to where they were back in 2016.
All right, Enda, thanks very much for joining us. Bloomberg's chief Asia correspondent, Enda Curran, talking to us about the trade war and how it's turned out 4 years in. Up next, how much further can this commodities rally actually go? We'll put that question to MLive's Laura Cooper, or rather, Laura Cooper has put that question with the MLive blog to Bloomberg clients. We'll find out what you've been saying. This is Bloomberg.
Is over for the oil market, and that we are positioning ourselves for a strong rebound in 2021.
There are now plans in many countries to go and vaccinate a good percentage of the people by the first quarter. And if that happens and we see a demand recovery, then I think the market can absorb it.
What is obvious today is that demand will pick up, not to the levels that we will all expect. I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
Those were some of the business and political leaders who spoke exclusively with Bloomberg's Manus Cranny at the Gulf Intelligence Forum over the last couple of days. Joining us now is Laura Cooper. She is Bloomberg's MLive macro strategist. And Laura, it's interesting when thinking about oil, the question of how much the economy is going to come back, how much driving is going to come back, and how much inflation is going to come back throughout this year. What are people expecting?
Well, certainly, those are risks ahead in terms of the outlook. So, stumbles in vaccine deployment and whether we actually see the pace of reopenings that markets largely expect. But I do think that the conditions are there for, oil and commodities just more broadly to really outperform as a core theme in 2021. So certainly, when we look at the demand recovery in oil, when we look at the potential for, Saudi Arabia and OPEC to continue to curb production and really ease at a gradual pace. And then overall, dollar weakness, strong Chinese growth, and just tight supply-demand conditions across a number of asset classes within commodities. I do think we are going to see, this is a real theme for 2021.
So in a sense, you're answering your question of the day on the MLive blog. Today you asked, how far can the commodities rally go? Of course, commodities didn't do as well as equities last year, but they've had a great start to 2021. What are you hearing from clients?
Well, certainly, I think, a key differentiation between last year and this year, apart from kind of that broad dollar weakness continuing through 2021, is just we have this, potential for sizable fiscal stimulus to come in through the U.S., and that will be supportive of, particular commodities. So if we look, for example, copper, platinum, I would anticipate quite bullish outlooks because, the clean energy initiative that it's expected to come from the U.S. will focus on kind of those infrastructure projects, those electric vehicles, green energy. So I really do think there's quite a lot of upside as that is not yet, really priced in by those particular sectors.
How are the markets pricing in Biden's reported plans to push through $2 trillion in stimulus, especially against concerns that the Fed is going to at least discuss tapering bond purchases?
Well, I think what we're seeing in price action today is really kind of this renewed focus on that reflation trade on the back of those reports that we could see Biden come out with that $2 trillion plan today. So we are seeing yields attempt to, recover from slipping lower over the past couple of days, and we are seeing curves try to steepen. Now, I think it's a case really at this point of whether it is kind of buy the rumor, sell the fact when we see actual details later today. Now, I think, in terms of the Fed potentially tapering, propelling yields even higher, I don't think that's really kind of a base case scenario. We have seen Fed members more recently kind of pare back that withdrawal talk. So I think given, really just inflation remains subdued, given the fact that, we don't yet know these details around stimulus, potentially the reflation trade has further room to run, but certainly maybe not to the pace that maybe markets anticipate going forward. Partially on the fact that, these vaccine rollouts, could potentially still stumble. So that's something to watch out for.
All right, Laura, thanks very much for joining us. Laura Cooper there, Bloomberg's MLive macro strategist. That's it for the European Open. Stay with Bloomberg Television. Up next, it's surveillance. I will be heading over to radio, however. And if you would like to join me on that journey, and if you're in the city of London, tune in on DAB Digital. Otherwise, just Google Bloomberg Radio and press Listen Live. This is Bloomberg.
Impeached again, Donald Trump becomes the only president to be impeached twice. He now faces trial in the Senate. Treasury yields rise on a report that President-elect Biden plans a COVID relief package of about $2 trillion. His inauguration is in 6 days. And Italy's government risks a collapse after Giuseppe Conte's junior coalition partner pulls out. Well, welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, apologies for losing the voice. It's a big news day with actually a lot of things that we're looking at, and sometimes these things happen. Now, the market firmly looking at the reflation trade after this news about this $2 trillion relief package. This is according to media reports, but certainly it's changing, of course, the way the market are looking at treasuries. Chuck Schumer pressing Joe Biden to propose more than $1.3 trillion in spending. That's according to a person familiar with the story, speaking to Bloomberg a bit earlier. Now, of course, a lot of the focus is on the Italian 10-year yield. Unclear, given the situation right now, whether we'll have a technocratic government or whether Prime Minister Conte will stay in power with another coalition. Finally, Carrefour, there's quite a lot of news on M&A after France saying they will also rebuff the advances of the Canadian giant. So a lot of news in the markets translated by a lot of news in politics. Now let's get straight to the Bloomberg. First word news here in London with me is Laura Wright. Hi, Laura.
Hi, Francine. $2 trillion, according to CNN. That's the likely size of President-elect Joe Biden's COVID relief package due to be presented later today. The channel reports his aides have recently told allies in Congress the size ahead of the announcement. It is likely to include direct payments to Americans and state and local funding. Twitter is standing by its decision to ban President Trump. CEO Jack Dorsey says it was the right decision in the name of public safety, but he sees the move as a failure to promote healthy conversation on the platform. Meanwhile, Airbnb is cancelling reservations in Washington areas next week, a move designed to minimize any violence at President-elect Joe Biden's inauguration. Italy's government is on the verge of collapse. A junior coalition partner has pulled out, meaning Premier Giuseppe Conte no longer has a majority in parliament. There's no clear end in sight to the political crisis in Rome. Conte may step down, leading to a new round of coalition talks or a new prime minister. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Thank you so much, Laura. Now, President Trump has become the first president ever to be impeached twice. The resolution was approved by all Democrats in the House and 10 Republicans. The president was accused of one count of incitement of insurrection for last week's riot at the Capitol by his supporters. Now, the next move is up to the Republican-controlled Senate. It's already rejected requests to bring senators back for a vote on the pandemic. Here are some of the comments from the debate on the House floor yesterday.
We know that the President of the United States incited this insurrection, this armed rebellion against our common country.
There's no way this helps the nation deal with the tragic and terrible events of last week that we all condemn.
If we impeached every politician who gave a fiery speech to a crowd of partisans, this Capitol would be deserted.
He must not remain in power one moment longer.
We must impeach and remove this president.
If inciting a deadly insurrection is not enough to get a president impeached, then what is?
Nearly half the country supports our current president. This takes their voice away.
A vote to impeach will further fan the flames of partisan division. That doesn't mean the president is free from fault.
And he is capable of starting a civil war. He must be impeached.
This threat must be extinguished immediately.
Last week, there was a domestic threat at the door of the Capitol, and he did nothing to stop it. I will vote yes on these articles of impeachment.
Well, joining us now is Peter Trubowitz. He's international relations professor at the London School of Economics. Peter, I think that the first thing that comes to mind is, why do you think so many Republicans in the House actually stuck with President Trump?
I think the answer there is that there's Trump's hardcore supporters are still with him. That's what the polls show, and so I think that many House Republicans feared a kind of backlash from Trump supporters. They basically tried to have it both ways, to condemn the insurrection and the attempt to sack the Capitol last week, and to stick with the president. I think the bigger issue is what will happen when this gets up to the Senate.
What do you think will happen, Peter? If I think there were 9, or at the end actually 10 representatives voting for impeachment. So what's the likelihood that we have the 70 needed in the Senate?
Well, I mean, that's a steep climb still, but a lot of this depends. It doesn't only depend on what Pelosi does. She's going to send the papers up, and it doesn't only depend on what Mitch McConnell decides to do, whether he moves, as reports suggest, towards conviction and basically puts his body down to make it possible for other Senate Republicans to do the same. And it doesn't only depend on what President-elect Biden does. It depends, I think, in part on what President Trump does over this next week. I mean, if Trump, and many fear that he will do this, moves to pardon himself and his loyal followers who tried to sack the Capitol, I think it will be very hard for a lot of Republicans not to move to convict. So I think there's just a lot of uncertainty here over the next week or so as we move towards a Senate trial.
Okay, if the Senate doesn't convict him, Peter, what future politically does Donald Trump have? Can he actually split the Republican Party?
Possibly. It's possible that he would still have a future. A lot of that, I think, will depend, first of all, on what comes out as the investigation of the insurrection takes place. I fear that the other shoe has not dropped and that there will be more information coming forward. And you heard allusions to that yesterday, even by members of the House, Republicans, who voted not to impeach. They're worried about more information coming out. Moreover, there's a possibility here that Biden or that the Congress calls for some kind of 9/11 or Warren Commission that really investigates this in such a way that that Trump is damaged in the process. The purpose not being to damage Trump, but I think it would be very difficult, given all of his actions, to kind of block the peaceful transfer of power here, for him not to come under considerable scrutiny. So I think this is just very hard to say.
Professor, is there something that would actually convince Trump's base that he's not right for them? And how does Joe Biden and the new administration move the conversation from constantly talking about Donald Trump to their policies and what they will be doing?
Well, I think that the latter is going to be very difficult. I mean, for Biden, basically he has to make sure that his administration is not consumed or subsumed by the Senate trial. So he's got to try to keep a safe political distance from it. And get the Senate to focus, on confirming his cabinet appointments and his agenda. I would look for, and I would recommend, if I were Biden, one of his advisors, to hold regular, perhaps daily news conferences to keep the public focused on defeating the pandemic and putting people back to work, kind of underscoring that those are his priorities, not what happens to Donald Trump.
What should Joe Biden's priority be? If you look at the COVID relief fund, there are various reports of him doing that. Is this what the Americans and actually the American economy needs right now?
Yes, I think that this is what people are expecting. And so I think he's going to need to move very quickly on that. I think he will. And I wouldn't be at all surprised to see it followed by an infrastructure package to basically put as much pressure on the Republicans to peel off some Republicans, around a kind of industrial policy of some type, but an infrastructure policy most fundamentally. So I expect to see him move in those kinds of directions quickly. There will be Republican pushback, especially in the House. And you ask the question of how do Republicans stop thinking about Donald Trump, focusing on Joe Biden and pushing back against Biden's agenda. That's the way to change the conversation. That's a very partisan outcome.
Thank you so much, Peter Trubowitz, their international relations professor at the LSE. Now, we'll have plenty more, of course, on U.S. politics. Also coming up, much more from Washington and the markets on what has been a historic week in the U.S. This is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Couche-Tard's $20 billion bid for Carrefour has hit a snag. The French government is opposing the deal, with Finance Minister Bruno Le Maire saying the pandemic highlights the importance of a country controlling its food supply. He says a rule on the screening of foreign investments could allow the government to block the deal. Standard Chartered is positioning a Singapore-based executive as its top internal candidate to replace CEO Bill Winters. Sources tell Bloomberg that Simon Cooper, who runs the lender's investment bank and commercial operations, has been taking development and leadership courses to prepare him for the top job. No comment from Standard Chartered. Could space be the next big investment opportunity? Cathy Wood, the head of ARK Investment, is launching a space ETF. The actively managed fund will track companies engaged in exploration and innovation. After massive inflows this past year, her once niche firm now oversees over $41 billion in ETF products. That's the Bloomberg Business Flash. Francine.
Thank you so much, Laura. Now joining us this morning to talk U.S. politics, to talk Treasury moves, to talk the dollar and everything in between is Toby Nangle. He's Global Head of Asset Allocation at Columbia Threadneedle. Toby, great to have you today on the program. Are we looking at the reflation trade continue?
Well, I mean, that's certainly the risk. I mean, the reflation trade has got a good narrative, and there are good signs coming through that all the things that you'd be wanting for that reflation trade to carry through are on its way. The news overnight, while it's hardly surprising, the 2 trillion number, is just another brick in that wall.
So what does that mean for, Toby, what you're expecting treasuries to do, and therefore how does that change your investment strategy?
So we've been seeing slight upward pressure on treasuries, but with break-evens above 2% on a 10-year, there's a lot of road that's already been travelled. As I mentioned, the narrative's in place, and the narrative, I think, is going to be important. The question from our investment perspective is whether that narrative becomes reality, or whether it fizzles out. At the moment, it seems that the narrative has got at least another sort of 4 or 5 months to run before we see whether that reality comes through, with rising core inflation measures coming through, with a spilling out consensus about the right place for fiscal. From our investment perspective, we haven't completely thrown out the non-reflationary narrative. We still got some position in some high-quality US firms, which wouldn't really benefit from the reflation narrative. But we do have big emphasis on Asia and Japan, which is part of that cyclical upturn, which does benefit from that narrative. And as such, I think we're positioned quite well for this. We haven't got a lot of duration on the bond side.
So duration on the bond side, what exactly are you interested in Asia, Toby?
So in Asia, on the equity side, we've got positions in Japan, Korea, Taiwan, and then also positions across China. Now, there's China positions have obviously been in the headline, in the headlines with potential executive actions and the impact on that. But on the reflationary theme, that's really benefited Korea and Taiwan, especially with things like semi-shortages filtering through, pushing up prices.
Where do you see, Toby, valuations being risky or equities running hot?
Yeah, I mean, so the valuation cases, I mean, that in aggregate, the thing which makes equities not look expensive is the context of low bond yields. And as such, that reflation theme and the degree to which it can unsettle bond yields is fairly pivotal. So we're fairly comfortable with US 30-year treasuries up to around about 2%. Beyond that, that starts to become quite problematic. Other places, I mean, there's obviously some frothiness in individual stocks, and there's lots of stories of that all over the place. But other than that, in the context of a supportive monetary policy, increasing fiscal support, we don't actually see that valuations look too stretched.
Is there anything to do with gold right now, Toby?
We're not really making a play for gold right now. Gold, the way in which I think of it, is as a portal asset. It takes you from one monetary regime to another. Bitcoin has become another portal asset, and that's seen an explosion of interest. That's not something that we're going into because we don't see the threat to the monetary environment to be sufficient to explore those sorts of trades right now. Also, a rising yield environment, although albeit limited, is not going to be one that we see that will be conducive to gold right now.
Toby, thank you so much. Toby Nangle there from Columbia Threadneedle stays with us. Now, coming up, Treasuries slide on reports of Biden's $2 trillion aid proposal. How much further can they actually sell off? We talk Treasuries next, and this is Bloomberg. Live from London and around the world, this is Bloomberg Surveillance. I'm Francine Lacqua here in London with a beautiful shot of St. Paul's. Now, Treasury yields climbing during Asia trading hours. It followed a report that President-elect Joe Biden is planning for $2 trillion of stimulus, a sum bigger than many estimates. Joining us now at the very latest is Bloomberg's Danny Berger to look at the markets and, of course, on the report. Danny, good morning to you. How worried are the market participants that yields may actually moving too far, too fast?
Francine, we certainly are hearing from more investors who are rattled at this point. In part, it is because of this new stimulus $2 trillion proposal as reported by CNN, but it goes further than that. It also goes to the fact that we've heard more Fed speakers, 4 to be exact at this point out of 18, who've started to say that they're thinking about starting to reduce those bond purchases. So the threat of perhaps pulling back, also concerning that we might get something that looks like a 2013 taper tantrum. We're seeing more strategists and market players alike start to say that this is what they have their eye on. We do need to remember, though, that the environment is wildly different than 2013. At that point, the Fed was still developing its toolbox, perhaps didn't have communications down exactly as well as we do have at this point today. Also, if you look at where 10-year yields are, they're still below the level they were last February pre-pandemic. So if anything, we could almost be talking about the story being, why aren't yields higher at this point, considering we are likely to get a big fiscal expansion, risk assets are all-time highs, and at the same time, we're expecting this big global growth pickup at some point this year. So those fears are out there, Francine, but perhaps unfounded at this point.
Danny, when you look at, is there a point where strategists think yields will trigger a fallout in actual other asset classes?
There's quite a disagreement on this point, Francine. I think it falls into two camps. There's one camp that says it's not the level that's important, it's the pace of rise in Treasury yields. JP Morgan, for example, says that a rise of 30 to 50 basis points in the 10-year over the span of a few weeks, that's when we get a concern, and that's when we get echoes of the 2013 taper tantrum. Others like Mizuho say, look, it's if we get something like a 1.6 or 1.8% on the 10-year yield, they say at that point, that's when you'll start to get this big reaction from emerging markets, which of course are sensitive to U.S. Treasuries. On the other hand, you can take a totally other view, as Nomura does, Charlie McElliott, and he says, look, I don't care about the level, I don't care about the pace it rises at, it is all about real yields. Real yields are what's important for markets, and at the moment, they are staying stubbornly low. So if you take that into account, it doesn't even matter what the 10-year yield is doing, but Francine, at the moment, it is still quite low despite the fact it's over 1%. All things considered, it is at a level that still many feel comfortable with, but we'll have to see how quickly it moves or how high it moves from here.
Thank you so much. Our Danny Berger there with the story of the day on treasuries. Of course, all of this linked to politics, but more than politics, linked to this package that media reports are saying Joe Biden will put in place for COVID relief. Now, treasury yields, as Danny was just saying, are actually rising with stocks on Thursday after a report about this relief plan being about $2 trillion. In Europe, if you look at the stock 600, still up, tech shares, banks, automakers actually leading gains, Carrefour shares. Now, I want to show you Carrefour because it was down as much as 7% after the French government expressed opposition to Couche-Tard of Canada buying the company. And then a couple of other things going on is, of course, Italy with the coalition on the brink. Unclear exactly if we'll have a technocratic government, if the prime minister can keep his job and maybe find another junior coalition. But you can see the Italian 10-year yield is 0.489. Coming up, can a country handle a political crisis on top of a pandemic and a recession? We talk Italy next. This is Bloomberg.
another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Thanks, Francine. Last year, Germany saw its deepest contraction in more than a decade. The economy shrank 5% as the pandemic raged and the government was forced to lock down citizens and close businesses. Germany is likely to have fared better than peers. Estimates for France and Italy both point to declines of about 9%. The UK economy is set to shrink more than 10%. President Donald Trump has been impeached by the U.S. House of Representatives for a historic second time. Democrats and 10 Republicans voted to charge him with incitement of insurrection for the role he played in his supporters' attack on the Capitol. The charges next go to the Senate for trial, but a conviction is all but impossible before Joe Biden becomes president. The U.S. is considering easing its restrictions on travel given new requirements on virus testing. The Centers for Disease Control and Prevention are discussing lifting curbs on flights from Brazil and the European Union. While its priority is protecting public health, the CDC says it's also aware of the economic damage of broad travel bans. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Thank you so much, Laura. Now let's get the latest from Italy. And the Prime Minister, Giuseppe Conte, is struggling to hold on to power after a junior partner in his coalition pulled out, robbing him of his majority in parliament. The former Premier Matteo Renzi said last night that ministers from his Italy Alive party would quit the cabinet. Now, he says the Prime Minister isn't doing enough to tackle Italy's problems. Let's speak to our Bloomberg opinion columnist, Ferdinando Giuliano. Ferdinando, thank you so much for joining us. I mean, there are a million ways that this could go. It's, you know, the Prime Minister actually either finds a couple of parliamentarians to give him the support, he stays in power, or he resigns, whether the president will accept it or not. I mean, this is Italian politics that many people outside Italy don't understand. Does it make sense, first of all, to have a political crisis during a pandemic?
Well, I think in principle it can make sense. Remember, this government has been very divided. Of course, the pandemic has helped to keep it together because there was a lot of ruling by decree by Prime Minister Conte. But these are very different forces. You have the left-wing Democratic Party, the populist Five-Star Movement, and the centrist Italy Alive. And they just weren't able, for example, to pass quickly a recovery plan for Italy to access the EU pandemic recovery fund. So, you know, if this government is not really able to make progress in important economic decisions, it can make sense to have a political crisis. But we just don't know whether the next government is going to be better than the one we've had so far.
Yeah, and we don't know whether it's a technocratic government or we have the new prime minister, whether we go to elections. A lot of people say now it's very highly unlikely. What are the consequences of Italy's sovereign debt?
Well, I think at the moment they're very little. The European Central Bank is still buying plenty of Italian debt. Investors know that. And as we know, as we can see, yields on Italian debts are basically a move today. But I'm worried about the kind of long-term consequences for Italy. This is, in a way, it's an incredible window of opportunity. Fiscal rules have been relaxed in Europe. There was the creation of the pandemic fund with over 200 billion in grants and loans, which Italy can have access to. You have the European Central Bank providing this incredible support, and all we see is politicians squabbling without really coming up with meaningful investment plans for the country. It's something which may come back to haunt the country in the future.
Thank you so much, Ferdinando, Bloomberg opinion columnist there, Ferdinando Giuliano. Now, still with us is Toby Nangle from Columbia Threadneedle. Toby, what does this mean for the recovery plan? What does it mean for the Commission plans? And is there any opportunity in Europe right now?
I very much agree with the comments, your opinion person that gave a couple of moments ago. There was a slight problem on the line. It was about opportunities in Europe.
Sorry, Toby. Yeah, do you like Italian either bonds or assets right now?
Yeah. We're like many people long Italian debt right now. When we have bumps in the road like this, the question always comes up: is this a kind of a common Italian political crisis, something more existential? It looks very much like like the former rather than the latter. A bid for relevance rather than an effort to do something more disruptive on Renzi's part. And as such, we're relatively relaxed about taking that spread on Italian bonds right now. But I agree that it does set up a more difficult time for thinking about leadership within Europe. The fiscal rules being suspended through 2021, but this has been up for consideration in spring about whether that's extended or whether something more fundamental happens to reconsider that, and puts Italy in a slightly less great position to participate in that with much strength.
Toby, what happens to a country like Italy, but also the Recovery Fund, if they don't get their act together in the next 6 months and try not to squander the money that the Commission gives them to make sure that the economy is on a better footing?
Well, I think the pressure's on for all countries to use their recovery funds well, but I think that the real issue is about how fiscal rules are set. I think that there's going to be probably some deeper thinking about what happens and whether we have another kind of north versus south battle going through, and whether Italy are in a decent position to argue with credibility within those discussions, and so that's really the test, I think, about how it sets itself up. Rules are set within Europe.
Toby, you froze slightly. This is a very 2020, 2021, as we do all of the interviews via Zoom problem. But if we can get you back, and I think you're back, and talking normally again, Toby, what do you do with UK assets?
So on the UK side, we see there's a lot of sort of structural headwinds associated with Brexit. But right now, we see that the prospect for relief is there. The UK has got a good tailwind, and there's a lot of M&A sitting there in the pipeline, waiting to come through, waiting for resolution of Brexit deal of some sort or another. So while we've got a very skinny deal, which I don't think sets the country up brilliantly for the future, there is some sort of resolution which does provide the catalyst for M&A to come through. And that we believe will help the market, along with its composition, which is benefiting from the reflationary theme that we're in right now.
Wonderful. Thank you so much for all of the insight. Toby Nangle there, Global Head of Asset Allocation at Columbia Threadneedle. Now, coming up, what will a new administration mean for U.S. environmental regulation? With less than a week until the inauguration, we talk green investing. That's coming up next, and this is Bloomberg. is Bloomberg Surveillance. I'm Francine Lacroix here in London. And now we're just getting some breaking news. This is data out of Germany, and the German economy probably stagnated in the fourth quarter. This is according to the Statistics Office. And of course, this comes on the back a couple of days after Angela Merkel also said that she will have to prolong and push forward for more lockdown measures. Now, in less than 1 week, the U.S. will have a new administration. While many will focus on the transition of power, investors are also placing bets on what a Biden White House and a Democrat-controlled Congress will mean for markets. Now, in particular, investors in green funds will be hoping that the new president's many pledges on the environment actually become a reality. Well, we're delighted, and I'm delighted, particularly, to be joined by Yuko Takano, Global Equities Portfolio Manager at Newton Investment Management, and Yuko also manages the BNY Mellon Sustainable Global Equity Fund. Yuko, what a great treat to have you on the air to talk about something that's extremely important, but that has actually, been at the margins and sidelined because of all the political news out of the U.S. What are you expecting in terms of ESG regulation or investing from the Biden administration?
Well, thank you, Francine, so much for having me. This is a real treat for me as well. I think I've been waiting for this for a couple of years now. I mean, obviously the blue wave win that we see, not just with Biden, but also with the Democrats taking the Senate and the House is, a very exciting time for the environment. I think that already, even under the Republican administration, a lot of things in the U.S. are run at the state level, and we saw a lot of the more progressive states over the past 4 years shift more towards renewable energy, particularly with their within the utility sector. So this is very exciting in the sense that now on a federal level, the government would probably make more of a push towards renewables. We do see that this is also great for job creation. So, for example, if you look at wind generation, the wages in that sector are very high. They provide employment in very rural areas, all of which is very positive for the U.S. economy.
Yuko, is there a concern that actually a lot of the ESG labeled stocks will be in a bubble? They were the biggest gainers and some of the most important risers of 2020. What happens to them in 2021?
I mean, I do think that the companies that continue to execute will continue to remain at very high valuations. There is definitely an ESG bubble, especially in the past year. That's been very apparent. And I think us as investors, we need to be really cognizant and aware of that fact. What we try to do at Newton is we try to look for more of the transition names that as we like to call it. So companies that have committed to certain milestones in terms of going more green, be it investing more in renewables or transitioning their energy source more to renewables, or, committing to net carbon neutral targets. And we basically monitor those stocks and see where they're transitioning to. And it all really depends on the execution levels. If a company is at low levels now, but is committed to becoming much better, we do think that that's definitely a much better investment opportunity than the names that have already been elevated in the market.
So we see some of your calls are overweight staples. You favor strong brands. Because there's something that you need for ESG to really take off even more. Is it taxonomy? Is it more transparency, or is it just making sure that greenwashing is something of the past?
I think all of those things that you just mentioned are great for ESG investing. I mean, personally, I think ESG investing is just a new chapter within the evolution of investing, and in particular equity investing, where, it is really, if you're a long-term investor, it is a form of sensible investing, because you need to look at a variety of ESG risks that will impact the share price if it poses a material risk to your investment case. And so in that sense, governments becoming more aware of those risks, in the form of the EU taxonomy, for example, is a very positive thing, because I think, nudges from the regulatory side as well as pushing from the investment side, all enable companies to have much better disclosure, and it enables us to analyze the companies in a much more holistic way.
Is there a part of the world where you're more attached to ESG companies? Or is Europe, because of the recovery fund, because of what the Commission has put in place, doing better than other parts of the world?
I mean, definitely ESG in Europe Europe has always been at the forefront of ESG. They've been very aware. A lot of the investors in Europe are really focused on green and really focused on the environment. So there, it has always been progressive in nature. What I'm actually really focused on is going back to our original point, the U.S. The U.S. has seen, especially in terms of ESG disclosure, huge improvements over the past 2 years. I've definitely seen a much more favorable tone, both from the investors, but also from the companies themselves in terms of disclosing more metrics. So I think that U.S. is on a very, very positive trajectory.
Will asset managers vote more and more against boards that don't take ESG seriously?
Yes, I mean, at Newton, we have been looking at governance over the past 15 to 20 years. And so we have a long history of voting. And usually on a typical year, we go against the management recommendations 30 to 40% of the time. And so, we remain very active in that sense as well. On top of that, voting is very important, but also as active managers, engagement is very important. And we think that engagement is a key tool for us active managers to really hone in on the companies that we invest in and interact with them on a regular basis in order to push for change.
Hugo, if there's something that you see over the next 2, 3, 4, 5 years, how much can your space actually grow? I know you started working on ESG and sustainability long before many people. Is this going to be the thematic for the next 2 to 3 years?
Oh, definitely. I mean, we've already seen huge growth trends in ESG, and I think this is going to proliferate the market going forward. And eventually, maybe in a decade's time, this will be kind of, more of a standard practice versus a niche segment in the market. So I'm really hoping that that's going to happen.
Yuko, thank you so much for joining us today. Yuko Takano there, Global Equities Portfolio Manager at Newton Investment Management. Now, coming up later, don't miss our interview with Clotilde Delbos, the Deputy Chief Executive and Chief Financial Officer of Renault. They'll talk about, of course, car emissions. We'll also talk about COVID-19, the pandemic, and the impact on the world economy. This is Bloomberg.
Good morning, ladies and gentlemen. Anybody who follow my trades and looking to trade British pound time, I'm going to place an order to buy British pound at 136.49. Let's play order and let's see if I will have a chance to execute at this price. Okay, let's see what's going to happen in the next few minutes.
As opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
We know that the President of the United States incited this insurrection, this armed rebellion against our common country. He must go. He is a clear and present danger to the nation that we all love.
Well, that was Speaker Nancy Pelosi after President Trump's unprecedented second impeachment. Now, all of the House Republicans and 10 Republicans voted to charge him with incitement of insurrection for the role he played in his supporters' attack on the Capitol. The charges next go to the Senate for trial. But a conviction is all but impossible before Joe Biden becomes president. Well, more on Washington throughout the day. Now, let's get straight to the Bloomberg Business Flash. Here in London with me is Laura Wright. Hi, Laura.
Thanks, Francine. Couche-Tard's $20 billion bid for Carrefour has hit a snag. The French government is opposing the deal, with Finance Minister Bruno Le Maire saying the pandemic highlights the importance of a country controlling its food supply. He says a rule on the screening of foreign investments could allow the government to block the deal. A trading app is warning it may have to restrict Bitcoin purchases this weekend. Retail platform eToro is fielding so much demand, it may have to put limits on buy orders for cryptocurrencies. Unlike stocks, cryptos trade 24 hours a day, and volume often surges at weekends when retail investors have more free time to play the market. Twitter is standing by its decision to ban President Trump. CEO Jack Dorsey says it was the right decision in the name of public safety, but he sees the move as a failure to promote healthy conversation on the platform. Meanwhile, Airbnb is cancelling reservations in the Washington area next week, a move designed to minimize any violence at President-elect Joe Biden's inauguration. The U.S. is considering easing its restrictions on travel given new requirements on virus testing. The Centers for Disease Control and Prevention are discussing lifting curbs on flights from Brazil and the European Union.
I'm moving a little bit higher my order to buy British pound at 136.495.
CEO Bill Winters. Sources tell Bloomberg that Simon Cooper, who runs the lender's investment bank and commercial operations, has been taking development and leadership courses to prepare him for the top job. No comment from Standard Chartered. Could space be the next big investment opportunity? Kathy Wood, head of ARK Investment, is launching a space ETF. The actively managed fund will track companies engaged in exploration and innovation. After massive inflows this past year, her once niche firm now oversees over $41 billion in ETF products. Renault is setting out goals for improving its profitability over several years and extending its cost-cutting. The car maker is targeting a more than 3% operating margin by 2023 and returns of at least 5% 2 years after that. It comes as Renault is battling declining car sales and the expensive shift to electric vehicles. Bloomberg speaks with Renault's deputy CEO later today. The US is said to be dropping its plan to ban investments in Alibaba and Tencent. A source tells Bloomberg the Treasury Department blocked the move, removing the uncertainty hanging over Asia's two biggest companies. Officials also debated blocking search engine Baidu, but also dropped that plan. And that's the Bloomberg Business Flash. Francine.
Thank you so much. Now, Laura, we have quite a lot of data. We had the German data earlier on, and now we have a GDP forecast from the French finance minister saying that in 2021, 6% GDP growth target is within reach. Of course, the main story on France is what the government said with Carrefour. Our reporters on the ground are trying to figure out legally if the French Republic actually says no, Canada, Couche-Tard cannot come and buy Carrefour, what legal decree or explanation they'll do for that. Now, we also look at the markets. Treasury yields rising, stocks rising today after a report suggesting that President-elect Joe Biden plans a COVID-19 relief of about $2 trillion. Now, Biden's advisors recently told allies in Congress about the cost of the package. That's according to the report. And Biden, of course, is expected to announce his economic support plans later today. I'm also looking at tech shares in Europe, banks, and automakers leading the gains. Now, Bloomberg surveillance continues in the next hour. Tom Keene joins me out of New York. We'll also look at what's going on in China. Alibaba and Tencent climbing after the U.S. decided against banning American investments in the Chinese tech giants. We look at China. We look at U.S. politics. We also look at Italian politics. We don't really quite know what the day will bring in terms of a possible new government or even a possible new prime minister. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Impeached again, Donald Trump becomes the only president to be impeached twice. He now faces trial in the Senate. Treasury yields rise on a report that President-elect Biden plans a COVID relief package of about $2 trillion. His inauguration is in 6 days, and Italy's government risks collapse after Giuseppe Conte's junior coalition partner pulls out. Well, Well, good morning, everyone. And this is Bloomberg Surveillance. I'm Francine Lacqua in London, Tom Keene in New York. Tom, I think the story in politics, I mean, we have various political stories. Of course, it's about the U.S., about inauguration, but it also is having a huge impact on treasuries because this COVID relief package could be much bigger than the markets were expecting.
Yeah, that to me is a secondary story this morning, Francine, as a number has shifted on stimuli, and I mean that as a plural idea. I would say we've gone from a general zeitgeist of 1.2 trillion, 1.3 trillion, and getting out now to real conversation around the 2 trillion number, which tells me it's going to go higher than that.
Yeah, I mean, if you look at the markets, it's definitely repricing, and I think we'll have a bit more detail on Joe Biden's, economic plan today. What's important, Tom, is also how President-elect Biden shifts away the narrative from, Trump, almost hourly to what his policy will be, and that feels significant.
It's going to be a problem. Somebody asked me this morning about that, and I said, well, I don't know when the pardons come, but it's expected that the pardons come from President Trump. So, shifting the story from this historic moment in the United States is going to be a challenge.
Yeah, could the president pardon himself?
Don't know. Well, you're asking the wrong guy. It's way above my pay grade.
That's why we're getting Marty Schenker.
Yeah, exactly. Schenker has all the answers, but I would guess that it has been untested. It's an original idea, Francine.
Yeah, it certainly is. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine, Tom. Well, now it is up to the Senate. The House put President Trump in the history books, impeaching him on a single charge of insurrection. It's the first time any president has been impeached twice. The resolution was supported by all Democrats and 10 Republicans. It now goes to the Republican-controlled Senate, which has refused a request to bring senators back and start the trial before next week's inauguration. Meanwhile, President Trump called on Americans to unite and avoid further violence. He spoke on a video released 1 week after his supporters stormed the Capitol. The president condemned the violence, and he said it goes against everything his movement stands for. He didn't mention the impeachment vote. President-elect Biden's advisors reportedly have told lawmakers a coronavirus relief plan will be in the $2 trillion range. That's according to CNN. Biden unveils a proposal today. It's said to include direct payments to American families and state and local funding. In China, the trade surplus hit a record high in December. Exports rose more than 18% in dollar terms from a year earlier. Demand for medical supplies and electronic goods surged in 2020. For the full year, the trade surplus was 27% higher.
Position opened on British pound. So you guys, if you place this order, right now you're on trade. So let's see how long it will take us to get profit from it.
Some sporting numbers. Yields, as Francine mentions, 2 basis point move back to 1.10 on the 10-year, but really pretty much a churn there. Oil churns and currency markets give me no information. I do note sterling buttressed right up just under 137. Francine?
Yeah, Tom, I have to say there's a lot of news out there. Treasury yields, so rising, you mentioned that. It's all in suggestions that Joe Biden relief plan will be about $2 trillion. We also need to look at what's happening in Italy. Now, this is not something small. The Italian 10-year yield at 0.489. There's a government crisis, even a constitutional crisis. Given Italian politics and the way that it works, it's unclear whether we have a new prime minister, whether the current prime minister will have enough votes in parliament to form another coalition. So all up in the air at the moment. And then I did also want to spend a bit of time on Carrefour, because if you look at this French company, so yesterday it was up 10%, Tom, after a Canadian grocer wanted to make an offer on it. And now the government, the French government is trying to block it. So again, this is politics taking over M&A. The French finance minister, Bruno Le Maire, saying Carrefour is a strong company and can also improve its model. But back to our top story, and Donald Trump was impeached for a historic second time yesterday. 10 House Republicans joined Democrats in charging the president with incitement of insurrection for his role in the Capitol riots. Now, the Speaker of the House speaking to Congress yesterday.
He must go. He is a clear and present danger to the nation that we all love.
Joining us now is Bloomberg's Marty Schenker, who oversees all of our coverage. Marty, first of all, good morning. But when you look at what yesterday was, did this just show us the division within the Republican Party and how difficult it will be for them to take a stance against Donald Trump?
Yeah, well, there's no question the Republican Party is divided, but what it did show, actually, is that you had 10 Republican representatives cross over with the Democrats to vote to convict. That is, I mean, it may seem like a small number, but it is the most bipartisan impeachment vote ever taken in the United States. And so it does show that there's a block of Republicans who are willing to vote against this president. And the question is, what happens in the Senate now?
Yeah, what happens, largely to the Republican Party? I know you say it's significant, but it's 10 out of 211 representatives, I believe. Yeah,
it's not that many. But I do think that the battle lines have been drawn between McConnell's Republican Party and Donald Trump's Republican Party. Mitch McConnell has said he's not displeased with the House impeachment action, but he has not said whether or not he would vote to convict. On the other side, Donald Trump released a video last night, which was, very full-throated condemnation of violence. There's reporting that his closest aide said he must do it to avoid legal problems once he leaves office. So it's unclear. Meanwhile, the Republicans who support Trump seem to think that his actions last week have no impact on their support.
Marty, good morning. Did we learn anything about the phrase Cass Sunstein writes about so brilliantly in his book Impeachment? Can't say enough about it, folks. High crimes and misdemeanors. What a wonderful phrase. They were a great band. They did Emerson, Lake and Palmer like no one. Did we identify yesterday high crimes and misdemeanors?
Well, there's no question that sedition and incitement for insurrection are very strong words. Unlike the first impeachment, where the question of whether or not these represented high crimes was fully debated, this one I think would be very difficult to counter. So the question is, what is going to happen in the Senate trial? Will Donald Trump send people for his defense if there is, and who would those persons be? Would Rudy Giuliani actually show up in the Senate to defend Donald Trump? Would be quite a show.
You and I remember, Marty, when Gore Vidal transfixed this nation from Aaron Burr out to Lincoln and beyond to the 1876 and the Reformation. There's a point in Lincoln where you understand Washington was at risk of being taken. And they had soldiers in Washington protecting across the Potomac to what was then Robert E. Lee's mansion. What is the symbolism to you of all these soldiers at the Capitol, as Bloomberg brilliantly yesterday in their headline alludes back to the Civil War?
Well, it's a symbol of the division within this country that forces us to deploy troops in order to protect our democracy.
Is it a separation of the South and the North? And I don't mean the romance of South Carolina and all the movies that we know, but are we setting up a new divide with the Deep South?
It's hard to say that that's the case because the people who stormed the Capitol came from all over this country, and there are pockets of conservatism and even white supremacy in New York State as much as there is in Alabama. So it is an urgent question for the United States. How do you bring these people who think that storming the Capitol is an expression of democracy back into the mainstream?
Marty, how does Joe Biden try and regain the airwaves to talk about policy?
Well, today he's going to introduce his economic plan, which some people speculate could be as high as $2 trillion. Clearly, Joe Biden wants to bring the discussion back to bringing the country together and to work with Republicans to get a stimulus plan. That conflicts with a Senate trial. And, if they move immediately to a trial under Senate rules, that's the only thing they can do. And he has to make a determination whether he wants the Senate to proceed with that.
Marty, thank you so much. Bloomberg's editor-at-large there, Marty Schenker. Now, coming up, we speak, of course, about fixed income. We talk about treasuries with Andrew Balls. He's PIMCO Global Fixed Income Chief Investment Officer. That's coming up shortly, and this is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Surveillance from New York, from London, a continued story of Washington. We'll have much more on that through the day. Look for Kevin Cirilli sound on Coast to Coast tonight, the 5 p.m. hour. Of course, David Weston holding court on All in Washington at 12 noon today. Right now, we try to get back to normal, and normal is 12 and 14 and 15-page reports that compel to be read. That's usually the case at PIMCO with their great team, including Joachim Fels. Andrew Balls joins now, their CIO of Global Fixed Income. Andrew, I like the behavioral construct of the PIMCO report. I'm going to go back to a TV show long ago and far away on the police of, I believe it was Brooklyn. Be careful out there. And you make it very clear within the certitudes of 2021, we need to be careful. What does that mean?
Yes, no, I like your Hill Street Blues reference, if that's right. So markets have priced in a lot of good news, and this is the way markets work. It may look very difficult out there now in terms of COVID across the world, but the market looks forward to vaccination and the recovery. And we forecast a strong recovery from the second quarter onwards, the strongest growth in a decade this year. But the markets have priced this in. If you look at particularly kind of equity markets, risk asset behavior. So as we say, we have a pretty optimistic view on the outlook, looking through this difficult first quarter. But be careful because there's a lot of risk and a lot of good news priced in.
The acclaimed concept of the new normal, it ages gracefully. People still talk about it all the time, Andrew, always citing PIMCO. Forget about it. What's the new normal at PIMCO?
So I think that construct has served us well. And if you just look at the level of interest rates and central banks anchoring the front ends of curves, then that has served us well. Looking forward, I think that as you look beyond this year, you start to see real uncertainty in terms of the outlook. And there's always uncertainty in the outlook. But plausible cases for higher inflation, but plausible cases for deflation, plausible cases for ongoing fiscal activism. We're talking about the Biden economic plan today, but also the potential for fiscal retrenchment. So I think, yes, we may have another year or so, another couple of years of the new normal to go. But as we look beyond that, I think as investment managers, we're going to be in a world with, what jargony kind of fatter tail risks, positive and negative.
But what's your take, Andrew? What's your feeling right now? Are we going towards, is this reflationary trade, does it have legs?
So I think the reflationary trade has legs in the near term, because I do think that, as dark is before the dawn, there is a lot of good news in terms of the progression on vaccines, and then there should be a lot of pent-up demand, so you can get to very strong growth outlooks. Central banks have told us that they're going to remain very supportive, and we expect that. It could be interesting when this gets challenged. The reflation runs into greater uncertainty on central banks later, but that's not going to be, I don't think, a story for this year, probably, certainly not the 6 months to come. So yes, I think that there is further room to run. But that said, if you take treasuries, you are anchored by a Federal Reserve which is going to continue quantitative easing, tapering, possibly at the end of this year, but much more likely next year. Years to come before we have rate increases. Janet Yellen at the Treasury, somebody who's going to be working very closely, very supportive of the Fed. So in effect, you have yield curve control, not formal but informal, and I think that should be anchoring for fixed income yields. So if Treasuries go up too much further, then they will start to look attractive, even at relatively low yields compared with history.
So Andrew, where are you expecting the 10-year yield year end?
I think around these levels to let's say 1 to 1.5% would be reasonable. I think as an expectation, as we get confirmation of the sort of outlook that we're forecasting in our PIMCO outlook. But you do have that push and pull, lockdowns versus vaccines. I'm no medical expert. I think it makes sense for fixed income markets, for markets more generally, to look to the other side of the valley to price in the recovery. But once you've priced in all the good news, you're just left with a set of downside risks. Disappointment on fiscal as one example, scarring in the economy as another.
Well, you've mentioned that twice. We'll come back and sit on that. Andrew Ball's with us on the fiscal disappointment to come as he tries to look over the Biden Valley. He is with PIMCO, and we're thrilled he can stay with us this morning. Futures up 8, Dow futures up 114. A churn to the market. I'm going to say it's constructive. We'll see off of economic data. We are attuned to Washington. That will be our major focus today across all of Bloomberg News, but we cannot stop considering the economics of the moment. Mary Daly, I'll get it out, too early in the morning, 3, 2, 1. Mary Daly of the San Francisco Fed in the 11 o'clock hour. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Tom Keene in New York. Tom, we're having a good conversation about treasuries. I know you want to come back and talk about Andrew Balls of PIMCO still with us. I know you want to talk to him maybe even about negative rates. But before we go to all of that, Andrew, there is another constitutional crisis in Italy if the government falls. I think it would be the 72nd government or thereabouts in about 78 years.
I was going to say the 72nd government since what, Christmas? I mean, it's amazing, Francine. Come on.
It is amazing, but actually, for once, it's difficult for an American to criticize Italian politics. Andrew, what exactly do you do with Italian yields?
Touche. I think that Italian yields have benefited a lot from the ECB policy and from the fiscal support of the fund, and so you've seen the rally we've seen over the past 9 months. I think here, I'm tempted to say it's kind of business as usual. Another risk to the Italian government. I think it's very unlikely you are going to have another election because the incumbent says they really don't have much an incentive to have an election. It would open the door to Lega. And supported by the far-right party. So I don't think that's likely. Mr. Renzi leads a tiny little party. I guess politicians, it's their job to get attention. But my expectation is that the coalition, maybe with some reformulation, maybe some support from the Berlusconi MPs continues. But it's a reminder, I think, with Italy, there's always going to be that fragility.
Andrew, I want you to take a page from the wonderful and missed Samuel Britton, or even the great work of John Plender at your Financial Times of years ago. And the idea is, if we look out into the mist and we know this fiscal debt is coming, massive fiscal debt, can we actually see when the tip point is where it becomes a challenge?
Well, I think it's really important to focus on the low funding rate. So if you look at debt service costs, even with higher, on the government side, this is, even with higher government debt, the service costs are not problematic. And in the case of Italy, This is particularly important, but in general, this is important. So I think it means that central banks are going to remain pretty wedded to the fiscal authorities, that you're going to have forms of ongoing yield curve control in effect to maintain the stability and create the room for much needed fiscal support as we're going to see in terms of the Biden proposal. I think where it gets difficult would be in the future in the world of rising interest rates. So say, for example, you did have upside inflation pressures. That's where some of these, the monetary fiscal partnership potentially gets harder.
Thank you so much. Andrew Balzer, PIMCO Chief Investment Officer of Global Fixed Income. Now, coming up on Bloomberg Surveillance simulcast, Jeffrey Curry, Goldman Sachs, Global Head of Commodities. That's coming up 1:30 p.m. in London, 8:30 a.m. in New York. This is Bloomberg.
我开始做直播是在今年年初的时候，主要是去年的话，可能参加更多的是线下的活动。今年大家都知道，由于中国的这个疫情，导致这些线下活动不能办了，所以更多的交流方式在线上。就今年春节之后，主要是开始在线上通过直播的方式跟粉丝进行交流。直播可能对于投资者来说是陪伴投资者，大家讲讲市场啊，讲讲投资的心理啊，这样的话就可以让大家在投资的时候，心情更平缓。平缓的话，能做到长期持有；长期持有的话，才可能赚钱。相对而言，线上可能覆盖的人群更多，因为可能疫情，很多人在家里看直播的人更多。反而可能，我这个工作可能是反而是受益于疫情的一个工作吧。
明天希望高开赚钱，
祝大家赚大钱。
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Tom Keene in New York. Tom, Italy's government at a risk of collapse. The former premier, Matteo Renzi, pulled his party's ministers from the ruling coalition, attacking Prime Minister Giuseppe Conte for failing to do enough to tackle the country's problems. Well, joining us to make sense of this, to look at the various scenarios and what happens next is Silvia Merler, Algebris Policy and Research Forum Head of Research. Silvia, as always, thank you for joining us. When you look at the various possibilities, how unlikely is it that, first of all, fresh elections are called for?
Hi, Francine. Thank you for having me. So I would say election is really an extreme scenario right now because, well, for a number of reasons. First of all, it's a very delicate moment for the country, needless to say. So the President of the Republic, I think, would go to great lengths to avoid piling an election on top of a pandemic and an economic crisis that is still very much in the making. On top of that, the recent reform of Parliament implies that the confirmation of Parliament that would come out of that election would be very different and it would be smaller. So I think there also is a little political incentive on the side of the Parliament to anticipatedly end their terms. So I think it's very unlikely in my view.
Silvia, and you have a great, on Twitter, you have a great feed really explaining the possibilities. I tried to go through it with Tom and I lost his attention span. So, I mean, does this just go to the heart, because there are so many possibilities at the moment of a technocratic government, Prime Minister Conte staying in charge with a couple of other parliamentarians, but does this go to the heart of the problem of Italy's debt sustainability?
So I would say the two main possibilities actually right now are this government gets reshuffled and probably gets a different prime minister still of political extraction, or this is not possible. It's not possible to find a majority for that kind of solution. And so a technocratic...
Okay, traders, I'm going to place stop on profit for British pound at 136.51.5. Okay, to place stop on profit. So if it will get changed direction, we will sell without any losses. Okay, see you later, guys.
Issuance in 2021 and 2022 will be substituted for by European issuance. So that obviously puts this political crisis in a favorable environment compared to similar crises in the past.
Silvia, again, your feed is just phenomenal, and I learned so much. I go, fallimento, consultazione tra I partiti e il Presidente della Repubblica, and I got two choices, accordo politico or nessun accordo politico. Cut to the chase. If we have a Monti redo with Draghi, a technocratic solution, can the technocrats set up boundaries to bring order to the political chaos?
Well, theoretically, yes, in the sense that obviously the prime minister, be it a technocratic or a political prime minister, will have some ownership on the government and the parliament that will back him or her. The big question is whether in practice this is possible and for how long. If you look in the past at the experience of Mario Monti, who was a very skilled technocrat coming to power in a period where actually economic urgency was even stronger than the one that we're facing now in terms of the likelihood of Italy potentially losing market access back then. The boundaries were in place and they stayed in place for about a year, but then soon after, when the urgency subsided and the support from parties started also to be lower, and eventually it turned out into a government crisis again. So I would say yes, theoretically it's possible to set boundaries around what you can and want to do, but any government still needs the backing in parliament to survive, and for how long this will be available, it's unclear, I would say, right now.
Silvia, first of all, shout out to Tom, who I'm so glad his private Italian lessons have finally paid off, because he actually speaks with a decent Italian accent.
I was fantastic, indeed.
Fantastico, Tom. In the next 6 months, Silvia, how important is it that Italy knows where to spend the recovery funds? Is it, if they're squandered in the next 6 months, does it put Italy back light years?
It is really hard to overstate how important this is. I mean, both for the country itself, because obviously the depth of the economic crisis is such that restarting growth and actually putting the country on a higher potential growth path is fundamental, but also for the entire European project, if you think about it, because this is the furthest that we have gone towards having some form of fiscal union, common EU spending, and very much of whether this will turn into a permanent feature of the European project is relying on countries doing the right things with the money and spending them in a proper way, in an efficient way, in a transparent and accountable way. All things that, to be entirely honest, were not that part of the initial drafts of the National Recovery Plan, which is improved lately. Still requires some improvement, but in the next 6 months, it will really make the difference, not only in terms of Italy surviving or failing in the future, but also the European project turning into something more stable and strong.
Silvia, thank you so much. Silvia Merler there, Algebra's Policy and Research Forum Head of Research. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. President Trump has become the first president ever to be impeached twice. The resolution was approved by all Democrats in the House and 10 Republicans. The president was accused of 1 count of incitement of insurrection for last week's riot at the Capitol. The next move is up to the Republican-controlled Senate. It's already rejected requests to bring senators back early. Meanwhile, Senate Majority Leader Mitch McConnell says he hasn't decided whether to vote to impeach President Trump. McConnell sent a note to colleagues after reports that he had agreed to vote in favor of impeachment. He wrote that he intends to listen to the legal arguments before deciding. National Guard troops have taken up positions in the U.S. Capitol. More than 20,000 Guard personnel have been summoned. That's turned the Capitol and its park-like campus into an armed camp. Authorities say there's a major security threat around next week's inauguration, and they're trying to prevent a repeat of the riots at the Capitol. And in the UK, Prime Minister Boris Johnson warns that hospital intensive care units could be overwhelmed. That's after the country hit its highest daily coronavirus death toll since the pandemic began. Johnson said there is a very substantial risk of intensive care capacity being exceeded, and he urged Britons to follow lockdown rules to curb the spread of the disease. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom?
Amy, thank you so much, Ritika. Greatly appreciate that. We move on from the history of this impeachment to January 19th, and of course the Senate's return to Washington. Amy Pope, Chatham House, frames out for the president-elect his path to January 20th. Futures up 2, yields move 1.11% in the 10-year. Early morning in Washington, this is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
know that the President of the United States incited this insurrection, this armed rebellion against our common country.
There's no way this helps the nation deal with the tragic and terrible events of last week that we all condemn.
If we impeached every politician who gave a fiery speech to a crowd of partisans, this Capitol would be deserted.
He must not remain in power one moment longer.
We must impeach and remove this president.
If inciting a deadly insurrection is not enough to get a president impeached, then what is?
Nearly half the country supports our current president. This takes their voice away.
A vote to impeach will further fan the flames of partisan division. That doesn't mean the president is free from fault.
And he is capable of starting a civil war. He must be impeached.
This threat must be extinguished immediately.
Last week there was a domestic threat at the door of the Capitol, and he did nothing to stop it. I will vote yes on these articles of impeachment.
An important vote there from the gentleman from Washington State, Mr. Newhouse, joining another Washington State colleague and 10 Republicans in voting against their president. Extraordinary moments. Thanks so much to our team for putting that together through the night, the voices of impeachment. Joining us now, Francine Lacroix in London, Tom Keene in New York, Amy Pope of Chatham House, who has a unique set of qualifications to talk about this historic moment. Amy, I want to fold in here your international experience with the response of big business. Big business, including the city of New York, is pulling away from Mr. Trump and his supporters. There's no question about that. Do you perceive it as an interim moment, or is there a permanence to how business will disassociate themselves from a certain part of the Republican Party?
Well, that actually might hinge on impeachment. If the president himself is impeached, then he is going to have a hard time getting support from any business in the future at any point. Otherwise, I think, business is pragmatic. They're going to be looking at who's in charge at what moment in time. Right. They're identifying the fact that the Senate and the House and now the president, they're all Democrats, and that there has been a turning point. So, I think this is an interim moment, really. They just can't stand with what has been a really horrific and shocking week in the face of.
I'm going to move my stop on profit further. And I'm going to move to 136.54.5. Okay?
Constituency of the Trump supporters is louder and seems to be better organized. Certainly, they're getting a lot more airtime. And so that is putting a tremendous amount of pressure on the members of Congress who we would traditionally expect to support a more traditional conservative Republican agenda.
Amy, what's the state of the Republican Party right now? I know we talk about divisions, we talk about possible splitting, but given the votes yesterday, and I know a lot of commentators say 10 representatives from the Republican Party voting against the president was brave, but this is 10 out of 211 of them.
I think the Republican Party has a lot of work to do in the coming days. They need to figure out where their center is and whether or not the tent can be big enough to accommodate the traditional business and traditional conservative Republicans, along with the more populist wing of the party. And right now, those factions are very much in tension. We know that, Mitch McConnell has clearly been leaking to the press that he's done with the president, but that doesn't mean that the Republican Party is done with the president. And so they need to figure out how they're going to take the moment and move forward. And there's no clear answer.
What do you think will happen?
I think ultimately the conviction in the Senate won't happen. I think Republicans will become too afraid of the price that they'll pay at the ballot box in the future. They know that there's still a lot of support for the president, and they're not going to want to sacrifice their own political and professional goals.
Amy, a philosophical question. You're real good at this. I mean, you're channeling Robin Niblett. I understand that. And that is the great distrust of conservatives is that if we spend a lot of money at the government, it will be ill-spent or inefficiently spent or misspent. How do you spend $2 trillion and do it in a good way?
That's a bigger question than I have time to answer right now. But I think, this is a moment in time where people all across the world, and including in the United States, are really struggling. And what we're seeing is a pretty significant difference in approach to the problem. If you look here in London, for example, where I am, or across Europe and in the United States. And in the United States in particular, there's a sense that there isn't a safety net and that the chasm beneath them is just growing larger and larger. And so I think that both parties need to come to terms with that and find a way forward through this really unprecedented moment in time.
Amy Pope, thank you so much. With Chatham House, our Associate Fellow of U.S. and America's Program. Very, very interesting this morning. Terrific experience working for President Obama. I thought of him in the early morning, and I am so happy that David Westin will speak to him. It matters what the friend of Donald Trump says. Wilbur Ross, the Secretary of Commerce, balance of power with David Westin in the 12 noon hour. That's going to be an interesting conversation. This is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment. The politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Rishika Gupta with your Bloomberg Business Flash. The owner of the animal supply chain store Petco raised $864 million in an IPO. The company is returning to the public market 15 years after it was taken private. Petco will continue to be controlled by the current owners, which include CVC Capital Partners. And Chesapeake Energy has won court approval for a reorganization plan that slashes about $7 billion in debt. In return, ownership is being handed over to senior lenders, including Franklin Resources. That caps a years-long effort to repair the company's finances. Chesapeake became bloated after repeated borrowing to fuel expansion. It entered bankruptcy last year. And that is your Bloomberg Business Flash, Francine.
Thank you so much, Ritika. Now, the UK Prime Minister Boris Johnson is warning that intensive care units could be overwhelmed as the country hit its highest daily coronavirus deaths toll since the pandemic began. This comes as J&J's experimental one-shot vaccine generated a long-lasting immune response in an early safety study. Well, we're delighted to be joined by Lucy McBride, Foxhall Internal Medicine Physicians. And Lucy, thanks so much for joining us. I know you're also based in Washington, D.C., and I believe go to work every day, and so you see this firsthand. Lucy, when you look at this one-shot vaccine, how initial is the initial stage? So how quickly could it be approved if everything goes to plan? And how much of a game changer would this actually be?
It's a great question, and good morning. Thanks for having me. You know, one-shot vaccine would really be a game changer. As you know, we're struggling with vaccine rollout and with administrative snafus everywhere you look. And so if you could have just one shot instead of two, we'd do a long way to achieve herd immunity. If the vaccine looks as good as it does so far, and it gets approved as soon as, next month, that would accelerate the ability to get most people the immunity they need to be able to open up their lives, to open up the economy, and also to curb this extraordinary surge in the number of the cases in this country.
Lucy, what's the biggest problem in terms of vaccination right now? Is it people that don't want the vaccine? Is it not enough vaccine doses? Is it two dosage, or is it just the, freezing method you need to be able to keep it?
So there are probably three main problems with the vaccine rollout right now. Number one is that, unfortunately, we're asking the busiest people in the country right now, hospital workers, to administer a lot of these doses. We really need to work on getting pop-up vaccination sites outside of hospitals and get like a core of people who are not already busy taking care of very sick patients to get the shots into people's arms. Secondly, the supply is not big enough. That's why we're trying to decide whether to give more people one shot instead of fewer people the two-shot series, which is, of course, what has been studied with these in the trials. And then three, there is vaccine hesitancy that's very, very real. One of the things I talk about with my patients every day is, I'm trying to dispel myths and separate facts from fears, because there are some very real fears, and naturally people have concerns. It's important to note, however, that most people who have questions and concerns about the vaccine are not anti-vaxxers. They have natural concerns about a new vaccine, and so it's important to field those questions and try to help people understand what the facts are.
It's a joy to speak to you, Dr. McBride, because you're in the real world. Folks, as you fly into Reagan and you come down the Potomac, just before Georgetown is where Sibley Hospital is, you fly right over where Dr. McBride practices. I am surprised that we are not distributing the vaccine through doctors' offices, because I remember that in my youth with the cold liquid nitrogen thing in the corner. Are we constrained by the refrigeration? Are we constrained by the technocracy of these new vaccines where we can't get it in the private offices of people like you?
Well, that's exactly right. The vaccine requires, extreme refrigeration and freezing, and then, not every doctor's office has the ability to have that kind of, machinery. Moreover, one of the problems with, for example, the Moderna vaccine is that every vial has 10 doses in it. It's not single dosed. So when you crack open a vial of the vaccine, and you only have 2 people on your schedule to give the vaccine to, and your pharmacy is about to close, you have to waste doses. So what we also need is a waiting list of people at the ready to be able to accept those vaccine doses. We have a lot of work to do administratively to get these things out there into people's arms.
Are you waiting for what Peter...
Okay, ladies and gentlemen, position closed at 136.545. So you made a profit. Well done.
$8,000 Americans dead from COVID-19. I mean, we need as many vaccines as possible. It takes a lot of shots on goal to get it right, and we've been extremely fortunate to have two very effective vaccines. But if we could get one that's single dose, doesn't require a lot of refrigeration, we'd be a lot better off.
You see, Francine, how Dr. McBride does that? She gets the Washington Capitals into it in a heartbeat with V.V. Chara resurrecting his career with the Capitals, right? Shots on goal. That's a Washington hockey talk right now. Dr. McBride, thank you so much with Foxhall and Turnus in the real world of getting the vaccine out to us. On the markets, with futures up 3, Dow futures up 79. Francine and I watching yields higher here on the migration to $2 trillion in stimulus. And, it'd be good, Francine, to frame out within all this maelstrom where the markets are. It's been quiet this week.
Well, it's been quiet because a lot of the focus is on politics, but now you can see it actually, the world of politics, and we're not only thinking about Washington, we're thinking about Italy, but even France, with now the French government saying they're not interested in, approach that the Canadian company did for Carrefour, and that's moving stocks, Tom.
Extraordinary news flow. Please stay with us on this. Greg Bottle, BNP Paribas, will join us to frame out the Greek letters of the market. This is Bloomberg. Good morning.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I've said to other women as they've taken on their CEO roles, I said, get ready, because everything you do is magnified. Everything you do is personalized. I can't tell you that that's fair, but it's what happens.
Substantial further progress means what it says. We'll be looking for an inflation to be substantially closer to our 2% longer run goal before we start making adjustments to our purchases.
That's a long time to be very accommodative, but that's basically the horizon.
They can buy more bonds and they can buy longer maturity bonds, and that would put more downward pressure on long-term interest rates.
This morning, Jordan of Ohio says it has always been about getting the president. Hoyer of Maryland speaks of lies, fear-mongering, and sedition. There is order in the House, a quiet in the Capitol. A president is impeached a second time. Biden, the president-elect, considers the, quote, urgent business of this nation. Could the stimuli be in excess of $2 trillion? And we affirm that Affirm is changing the technology of finance. The gentleman from PayPal, he does it again. Good morning, everyone. Bloomberg Surveillance. I'm Tom Keene in New York. Francine Lacroix in London. Francine, this Affirm deal is a huge, huge deal. It's not another IPO. It is about the guy from PayPal, Max Levchin. What he's done here is remarkable to just level the financial services business. Everybody in global Wall Street is watching Affirm and their future competitors.
Yeah, I agree, Tom. This could, it's not only revolutionary, but it could really change that space. The other thing, Tom, is that we spoke to a number of high-profile bankers that have been looking at risks out there for a long time, and I know a lot of the focus right now is on politics, but many of them are saying it's also cybersecurity. So when you look at the space for financial firms, maybe we should spend also a bit more time looking at what we can see, which is all the attacks and malware stuff out there.
Well, the attacks right now in big banking in America is simple. Affirm is taking the high ground along with many others, including PayPal. And it's just fascinating to see what has been talked about for 5, 6, 7 years come to fruition, from $30 to $41, closing up in the 90 level. Who knows where Affirm will be this morning. Right now, on the politics of the moment with our First Word News, here's Ritika Gupta.
Morning, Tom, Francine. Now it is up to the Senate. The House put President Trump in the history books, impeaching him on a single charge of insurrection. It's the first time any president has been impeached twice. The resolution was supported by all Democrats and 10 Republicans. It now goes to the Republican-controlled Senate, which has refused a request to bring senators back and start the trial before next week's inauguration. Meanwhile, Senate Majority Leader Mitch McConnell says he hasn't decided whether to vote to impeach President Trump. McConnell sent a note to colleagues after reports that he had agreed to vote in favor of impeachment. He wrote that he intends to listen to the legal arguments before deciding.